Good morning, everyone, and thank you for joining us in this panel session. So today's panel discussion is about exploring the future of banking and financial services. We are at a pivotal moment in financial industry where rapid technological advances like AI, cloud computing, and as well as Web 3.0 are reshaping the way we think about banking. As a digital-first customers, continue to expect more seamless and as well as secure and personalized experience. Traditional financial institutions are being challenged to innovate, adapt, and redefine their roles in this evolving landscape. Today, we will explore how banks and service providers can leverage emerging technologies, navigate disruption, and build future-ready strategy that balances innovation as well as trust, inclusion, and resilience. To start with, good morning everyone, panelists. To start with, let's proceed to our questions. I wish to go first to Patricia from Security Bank. What are the primary drivers of disruption in the banking sector? How can institutions leverage effectively?
So for this one, I would like to really give focus to three things. And since this is our BFSI, first one I will highlight is technology. So technology is always going to be a big driver for innovation. Advances, so such as AI and other technologies, will always be, shall we say, triggering the upgrades of the changes in not only our tools, and not only our the way that we do things, also generally would change processes as well. The second thing that drives innovation in general is regulation. So we are in the banking industry. Regulations will always be forefront of what we do as a bank. And third is the customer. So the customer will the demands from the customer, the needs of the customer will always be the one that dictates what we do as banks, as fintech, as insurance companies. We need to be able to meet those demands.
Thanks, Patricia. You mentioned about regulation. So I wish to redirect my questions to Paolo coming from SEC. How banks can partner with fintechs and startups to drive innovation without compromising security or regulatory compliance?
Thank you, Kenneth. Very honored to be here, especially with my distinguished colleagues with me in the panel. Please allow me to mention first that I'm here to share my experience as the Assistant Director of the Fintech Office, but my views and opinions are my own and does not necessarily reflect the Commission and any of its officers and employees. So thank you. Thank you for the question, and that's what we're trying to do with the SEC. We're trying to bridge the gap between innovation and regulation. Patricia mentioned earlier that that's one aspect of the business that is really key for growth. But we believe that innovation should go before regulation. So regulation will always lag behind it. And one regulatory tool that we use in the SEC is the regulatory sandbox, wherein innovators can test their novel product in the market and in a controlled environment. And in that kind of setup, we can actually evaluate the actual risk that it brings to the market, and the regulators can analyze and learn from the experience to make an appropriate regulatory response. So usually when we get applicants for the regulatory sandbox, one of the maybe one information that would really help us approve the sandbox application if they partner with a highly respectable institution, like for example banks. So that makes the regulators more comfortable to allow these kinds of new products. So that's one maybe strategy that innovators can 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 enter the Philippine financial system, financial market.
Thank you very much, Paulo, for that. You've talked about innovation, and I wish to redirect this question to Toki. Right? How can banks innovate their payment infrastructure to maintain competitive relevance?
Thank you, Ken. And good morning, everybody. So, first, I have a confession to make before I answer that one. So, I'm just a newly migrant to the BFSI because recently I've been transforming hospitals, healthcare, and for the past 2 years we've been transforming about 27 hospitals in the Metro Pacific Group. It's a good challenge to transform that ecosystem of 27 hospitals from the largest to the smallest hospitals. And but prior to that, my background has been in the wallet space. So we were developing this solution for the bank, and we were packaging it in a telco. So the genesis of Maya was smart money version 1. Smart money was the core system is a banking system, and then the front end is also a tethering system. And what made it, so it took us a good 10 years to be able to capitalize on the investment. It took a pandemic to do that. And the reason why I'm sharing this is that you can learn a lot from the e-wallet industry of payments. Because when all of the branches closed, there was no other alternative as to doing digital. And the wallets was already there. So it took a good 10 years in diligence to be able to capitalize on that infrastructure when nobody could go out and you needed to transfer funds, get money, and also to open your account. The wallets were able to break through that last mile of opening an unbanked, first time banker. And many were still adopting at that stage, but we were forced. We needed to use an app to be able to transfer money from one person to another. And we were already doing that in the telco. Now, during that stage, it was the e-wallets were dominant, low, of course, high. And we were able to crack the unbanked adoption. Now, it became a catalyst for many of the banks to go digital because they saw that 8% of the transactions were happening in the e-wallets, and the banks had closed their branches. So they needed to come up with a similar solution to open, because previously you had to go to the bank to open an account, you could pause it and make other transactions. But then you're not allowed to do that. So now the wallets are showing the way, and the banks followed suit. And they can now open your account in under 5 minutes using an eKYC. You can now apply for a loan in less than 1 hour and get perhaps a recommendation or approval. And in fact, some of them are going straight through loan processing that allows you to get your loans dispersed in your account and your bank or an e-wallet, and it expedited the transformation of payments. So another industry was the pattern for the transformation. But that industry, the core of it, is also a banking core. Did that help in answering that question?
Indeed. It really helps to give an overview of how are we transforming our payment, right? We have transformed some of our unbanked starting to using e-wallets, and it's pretty dominant even though in a far-flung areas like in Mindanao, where I came from, if you're buying fish coming from fishermen, you don't have sometimes you don't have cash. But as long as you have a QR, you can do transaction and trade. So it's become more and more effective in terms of how are we getting people onboarded in terms of using this kind of facility. Alright. Thanks very much, Luki, on that note. I wish to talk about virtual banking with Paolo coming from Paybank. So, how is virtual banking transforming the way traditional banks interact with customers? And what best practices have emerged in delivering a seamless digital experience?
Okay, so for a traditional bank going into virtual banking, the approach, at least from my perspective, is been more channel first than banking later. Because the priority still of traditional banks, good or bad, is still how best to serve our customers. So with digital coming in, and again driven by fintechs, wallets, and whatnot, there is that expectation from customers today. You have to offer it as well. But what we're looking at from the people like of traditional banks, that we're going by, I think some of that all of you have heard of this. We're going by a digital model where as much as we can, it's a digital first approach. But at the end state of it, if you need final personal touch or a legal confirmation or a transaction verification, there is that level of physical contact that you can still go to. Now, will that be the model in the next 10 years? We don't know. But I think on a banking standpoint, which we've picked up from our partners in fintech and wallet, is that it's now driven more by the customer rather than driven by the banking framework. So like before, right? And for those who've been here before the Mayas of the world and the Gcash of the world, all banks, whether you like it or not, each product you need to go for. Each product. But with the emergence of wallets and fintechs, it has been proven that you can actually choose not to do that. It's a one customer touch approach. And nobody in banking thought about that until these players came along. So I think that synergy of the new tech versus the old way is evolving into a method where the banks can actually pivot depending on the customer. Especially in this generation where admittedly there are people like me or older than me that will not fully adapt. They will not. Whether or not you give them a choice, they will not. So we still have to cater to them. But you have the Gen Zs and the Alphas where if you do not cater to their priority, which is convenience, security, always on, then you lose out on that future market. So banks are a bit tricky in that response, in that aspect where we need to thread the line without offending one segment or the other. You know what I mean? So that's the challenge. But that's also the opportunity. Because we give the structure of a traditional bank with the convenience and with the adaptability of a fintech.
So it means the success of it relies on the generation of the age of the consumer, right? You mentioned the older generation still prefer to go back. A very example, my mother, 65 years old, who travels every day to the bank to deposit her daily income from her grocery, right? I said, if you can just do that virtually, but she still prefer to do that, right?
So that's a good example. So most banks right now, even if you go to the branch, you already see some sense of technology coming in. So depending, say, of your profile. So if they know that you're a priority customer, you go to the top of the line. And they don't have to go to the teller and check your record because essentially there's a recognition either by way of your identification or your account number. Queuing systems, that's actually something that we've gotten from food. What's this? AI in terms of when you go to a teller, they can actually offer you a loan product without them telling you that, but we'll see in 2 months, 3 months whether you're qualified. That's AI. That's credit scoring. Right? So even if we still maintain the brick and mortar, you still see already snippets of technology, coming into the banking sector.
Thanks, Paolo, for it. We should talk about generative AI. So I wish to have this conversation with Patricia coming from Security Bank. So how should financial institutions approach adaptation of generative AI from use case to governance and risk management?
So thank you for the question. In this case, so as I mentioned earlier, one of the things that banks need to take into consideration is regulation. However, so as one of my co-panelists said, it's really also a balance between that and catering to the needs of the customer. So in terms of generative AI, I think banks and other financial institutions need to approach it with a degree of curiosity, but also grounded in reality. So it's exciting, right? So it's the age of really fast innovations with respect to Gen AI, and a lot of us will go like, hey, let's try this. Maybe it will work with our systems or with our processes, but of course it has to be grounded. Would this work? Is it going to be worth the investment? Because of course you will be investing not just money, you're investing your time, you're investing your resources into it. So I would like to say that Gen AI needs to be approached with the goal in mind. What do you want to achieve with Gen AI? And then create your strategy for it. So in that sense, my advice to financial institutions is identify maybe a couple of use cases that can be supported by Gen AI, and then take it from there. Create the strategy from there.
Gen AI is a very buzzword right now. So it means that banks should not take it as a way that, oh, everyone are going to Gen AI, so we're now starting to do things, but rather aligning your strategy, right? Do you really need to use AI, or probably do some use cases first in terms on using AI, right? There are also lots and lots of suppliers or technology providers providing that, right? But the question is, do you really need it, or probably align first to your organization if that is the strategy that we are moving forward? Yes.
That's very interesting, and I was sharing to my friend here, friend from PMB. I was asking, are you going to be an AI user or an AI builder? Because if you're just an AI user, then you just subscribe to an AI tool and then use it for loans or for your process and for your business. Or are you going to be an AI builder? And that's a different thing.
Yeah.
So the genesis of AI should be like that. So we have the basic enterprise data warehouse collected and clean, right, and cleansed.
Right.
Because without it, you can't start your journey. The other thing that actually surprised me was the comment, I think the takeaway I got from Dr. Sala's presentation was that business intelligence is dead. So how many of us are still developing dashboards? Business intelligence dashboards. I am one of them. But then it's simpler for me to ask a generative AI a question that the dashboard can also generate.
Yeah.
And it's on fly. And it's faster than creating a dashboard. So I guess we are really open. So you have to make a decision. Are you a user, an AI user, or a builder?
It's a very nice situation that you need to be into it and really thinks about where you want to be in that kind of situation, obviously, a realignment to your organization's strategy is key important there for you to be able to understand, am I a builder or am I a user? It's a very good point there. I wish to go back as well to Paolo coming from SEC, right? What steps should institution take to ensure inclusive and accessible digital banking for unbanked and underbanked populations?
I'm gonna answer the question you asked already. So, Gogi mentioned earlier that services are getting more faster because it's delivered through technology. And we see lots of advertisements. For example, get a loan, get 50K loan for 5 minutes, in 5 minutes. And we see a bit of an issue, if I may say, an issue with that. Because there are safeguards in place that should be working before an ordinary Filipino can access those kinds of products. For example, Truth in Lending Act requires the explanation of the fees, the term of the loan, and more information. And we feel that 5 minutes wouldn't be enough to cover all those bases. So we implore innovators, fintechs, banks, that while we are encouraging Filipinos to access financial services, please be reminded that they would need more education and they would need more handholding because maybe it's going to be the first time to access these kinds of products. So please make sure that the regulations and safeguards put in place by our financials.
Okay, thank you as well, Paolo. We have talked about generative AI in terms of our use case ability in our banking. We also talk about how the payments has been transformed, the way how we do things in terms of doing transactions, right? But there are still banks as their legacy systems embedded with their footprint. So I wish to redirect this question to Muki. How can legacy banks balance modernization effort without disrupting core services or alienating long-term customers?
Second confession. I came from a legacy bank, and one of my motivation why I wanted to do digital transformation is that 5 years after I left, the legacy bank closed. And now, in my current role, we are investing in banks and transforming them into a smart bank. It used to be, in telco, we did transformation for 10 years until the pandemic happened. CapEx intensive. For the insurance space, it took us 4 years to transform traditional insurance company into InsurTech or a digital insurance company. Now for banks, my experience, because we have transformed so far 7 banks, takes about 6 months. From a legacy, particularly, what's interesting, the smaller banks are the ones who are more susceptible to transformation. And the bigger complex banks are somehow there and not there because of the conglomerate infrastructure and the number of fences that were set up. So there are about 380 rural banks in the country and 35 thrift banks, and the rest are the combo banks, the BDOs, BDAs, and security bank. So there are 3 stages that we do. First, you cannot do transformation without cleaning your technical debt.
Yes.
You must identify first because that's a business. That's the life of the business. You have to clear up your technical debt. Then second, you have to decide, do you go on-prem or on cloud? Fastest way is to go on cloud and subscribe to the SaaS service. And then you realize that where do you want to do your transformation? It's very difficult to do your transformation on the core system. I think many of us here still have our core systems on-prem.
Yeah.
Right? How many of us still has your core banking system on-premise? There are a few, or just shame to admit. My legacy bank, we had the core banking system on-prem. All of our servers are on-prem in a very nice and secure data center. You don't want to touch that first. But we needed to do something that the e-wallets were doing. So that's an application. An application that allows us to open an account within the app in under 5 minutes.
Yeah.
And take out a loan in under 5 minutes as well, depending on the risk measures that they implement. So that's the first stage. You do a stage 1 transformation, which is actually step from end.
Yeah.
But then, while doing that, you need to remove the logic and migrate that logic in a middleware. So either you put it in an orchestration layer or an API management tool and move out your logic from your core system. Your core system logic will be migrated to a middleware so that you can now cater to more transactions and other contents in the future. Maybe partnering with another external partner like Grab or Maya or the other fintechs. Then once you have completed your middleware infrastructure, you have migrated, essentially what's left is your core data and your core banking system, which is just a glorified database.
Yeah.
And then once it's a glorified database, you can now opt to make that into a cloud infrastructure or a private cloud infrastructure. That's stage 3. There's a stage 4. Stage 4, and depending on your priority, stage 4 can be AI in stage 4, or you can do AI now, as long as you have your EDW in place. So whether you do stage 4 early or stage 4 after you do your core banking transformation, that's what we've done for the 7 banks that adopted to become a smart bank. So it was a simpler journey of 6 months than a bank, probably a complex bank, which might take longer than that. It's actually 3 to 5 years.
Yeah, indeed. And probably not just 3 to 5 years, because we still see that they are still existing, that they have not moved, because obviously there could be some things that holding them up that might take long, right? Isn't it?
Yeah, I'm really surprised by the agility of the rural banks, Congo banks and the third banks, because they really embrace this opportunity. Like I know this another rural bank in Santa Rosa, rural bank of Santa Rosa, who adopted digital.
Yeah.
They can offer they can now offer higher yielding deposits because they have minimized their physical infrastructure.
Yeah. So that's the reason behind why they're providing that high yield, the biggest challenges, right? And opportunities in scale and virtual banking. So I wish to get that statement from Paul from Maybank. So what are the challenges and opportunities in scaling virtual banking operation across diverse markets, especially in regions with varying levels of digital adoption, right? It's very evident in the Philippines, right? Most of the advancement that happened in Luzon, Visayas, but not far from where it came from in Mindanao, the southern part. There's still some that's happening here. So what is your thought?
So let me talk first about our regional approach, because that influences the regions here. So our headquarters is here in Kuala Lumpur, in Malaysia. So if you look at Maybank globally, especially in Malaysia, we're number 1 there. So in terms of digital capability, we pretty much have everything there. We have InsurTech, we have investments, we have we're going into generative AI. But because the Philippines, again, because of the legacy systems that we use in the country, a lot of those are not trickling down as fast. So, but the opportunity there is that with the emergence of SaaS, with the emergence of middlewares, we can bridge that gap where we don't need to upgrade the legacy systems now, but try to get the front end and see if it works for us. And if it's something that has a risk in terms of security or accessibility, then we can either migrate to on-prem or develop our own with the local technology. Now, our biggest challenge in terms of the virtual banking or the digital banking space is, I think, three things. One is, as touched on earlier, education. Because what we don't want to happen is we offer so much opportunity to open products where customers are not aware of what they're getting. Especially when you go into complex products beyond deposits, beyond basic loans. Second is fraud. And I think with AFASA coming in, and with all the cybersecurity measures being put into place, the industry itself has a responsibility to make sure that it's very expensive for fraudsters to conduct cyber fraud. What do I mean? Right now, because the Philippines do not have a national fraud database.
Yeah.
So if somebody gets scammed, only the bank, the receiving bank knows about the scam. Even if I close the fraudster's account, if they open in Security Bank may wouldn't know.
Yeah.
And because of the ambiguity in terms of the Deposit Secrecy Act before, Security Bank cannot compel me to disclose. That was the situation 20 years ago with credit. Before the Credit Bureau came up, before TransUnion came up, before C4 came up. And that is the one thing that as an industry we want to push. Because a 10,000 peso ID, a driver's license, if you open it in 20 banks, that's a cheap ID. If you're able to scam 100,000 pesos, that's a cheap ID. But if you only can scam one bank and only get 20,000 pesos, that's an expensive ID. And if you're a scammer and you use your face and a different identity, if there is no industry-wide system, 5 banks can actually use your identity and you can scam 5 different people. But if there is, and this is where the AI becomes important, if there's a database that spots your ID with a different name, Security Bank can close your account and you cannot victimize another person using the banking system. So that's the biggest challenge, especially in the provinces. Because the provinces, unfortunately, do not have the same level of education afforded to urban areas. So I think for me, personally, that's what keeps me awake at night. That's what, am I growing so fast that I might be exposing people to that danger? That's the biggest challenge. I think Filipinos are smart enough to adapt. I think that's one of the things, the fact that Maya and Gcash grew exponentially is a testament to that. But once you start introducing microinsurance, once you start introducing micro-lending, once you start introducing crypto, that's where all these things suddenly become very important in terms of both education and security. So that's both the opportunity, because the bank that can offer that assurance to the client will be the bank that these people will trust. But that will also be the issue, because unless the industry comes together and says, hey, we need a framework for A, for education, for B, for security, and for 3, for interoperability, all of these things eventually will lose steam. And that's what I'm afraid of. Sayang yung gains.
We should give some use case how ING have worked with that. ING formed an alliances with multiple national banks to create a blockchain in terms of trade finance, right? So each one of them can see each other, what's happening, and they didn't always pay suppliers and trades at the real-time segment because they're interconnected to each other. They trust each other, they share data each other, and things, if they will see something there, then all of their groups can know, oh, there's something wrong with it. So probably it's something that really missing on the banking industry in the Philippines.
Can I comment?
Yeah.
That's a wonderful point. First, in another industries, in the healthcare industry, we had an opportunity to gather the data of the 27 hospitals. So we're a holding company. And the first step was to get them on board the group EDW. Because the pain point was you go to Cardinal Santos, you fill up 20 forms, and then you go to Makati Med, you do it again. So but those information are already existing in one entity. So we created a group EDW, which was very hard because we needed to ensure that data sharing agreement exists first, and the data privacy officer is on board. Now, once that was settled, we needed to ensure that the data that are already vetted by each of the entities can be shared without the involvement of data. And that's where blockchain comes in, where you have to, let's say, Kenneth, you were admitted in one hospital. You just wanted to authenticate that this is you, without telling all of your details. Just getting vetted by one infrastructure, that's good enough. In our industry now, there is a move from the government to use a national ID, which has 87 million registrants. And what's fantastic here is that right now, all of us probably have different providers for eKYC. I have three. So I experimented all of the eKYCs, but well, maybe not too late, but hopefully the government can use that national ID as our own eKYC bank. Because you need not be eKYC in every single bank. That's so painful. You already have information like your driver's license, your passport embedded in that eKYC. Why not we use it? So that's where the open finance framework will work. As long as we trust that infrastructure in a blockchain, perhaps, or something similar, an ecosystem.
And I think this is where the private-public partnership becomes important. And we've proven that in CIC. Because CIC is the Credit Bureau of the Philippines. As long as you have a reputable private manager of that information, then adoption becomes easy. The biggest challenge of the national ID now is that partner is not being identified. When you want integration, you need to put it into the government plan. So once you have that sense of, it's easy to learn, it's just an API, then national ID implementation would be very, very good. So, and once national ID is quick, then that's the opportunity. Because as long as you have a national ID, you can open a bank account now. But that is also the challenge. Because as we all know, the Filipino also has the ability to fake anything. So the security now of the national ID becomes important. Because once you integrate, you have to make sure that that person is really that person. Right? And it's quicker now because when you connect to the national ID, it's like seconds. Right? So that's, I think, one of the examples of it being both an opportunity and a challenge. But I think the national ID for me, that's a great step forward. And hopefully, when you have the national ID, you have a unified ID. Which is such a pain to have like 10, 15 different IDs and then check each and every one. It's smooth path.
Just chime in. So we at the CC we do a lot of enforcement actions, especially on scams. And I agree that we need a more reliable, if anything, credentialing system. So right now, the most available tool for us in trying to trace scams is the SIM card registration. But we all know there's a lot of problems behind that. So I'm just gonna stop. Thank you.
So, we still have a little bit of time, but I want this to open for any questions coming from our guest here in the audience. So So if you have any question that can our panelists answer it, you may do so. I think we have here in table number 2.
So, good morning. I'm Wilbert from IEB Philippines, a startup company actually. So, from IEB Philippines. So, to give you context here, I previously worked in Muslim countries, in UAE and now in Malaysia. So, I just flew yesterday to attend here. So, most banks or fintech platforms are conventional and interest-based. Since our company will serve Muslim Filipinos, bawal sa kanila yung interest. So we avoid interest-based transactions. So to address this, so we're working on this startup company. So to promote Islamic finance. So my question is, does your institution have plans to expand into Islamic finance? Are there any initiatives or roadmaps in place to develop and consider Islamic banking services?
For me, the answer is yes. We've actually opened our Islamic banking window for the 8 or 16 branches. We're in the process of rolling out a digital Islamic deposit platform, and then followed by credit. That said, again, it's early on, so we need to have a lot of regulatory guidance. But globally, may bank has an established Islamic banking. That's all.
So for us, we don't really say no to a lot of demand from our customers. So right now, I would say that if there is interest, why not? And to support that, we need to be able to have the correct products, the correct security to provide our potential customers to be able to convince them that it is safe to bank with us. Because of course, one of the most important factors in banking is trust. Right? So it's the most important commodity. And it's something that we cannot sacrifice. So even if we're going into new sectors, new industries, this has to be the first factor that needs to be considered.
Well, thank you, Nat. For good tech, we are also in negotiations with 8 other banks, possible acquisition. And yes, one of them is a bank that we offer our friends to an Islamic institution or financing. We just need, again, to look at the business case because the first priority is is there a need for that and how big is the need because we need to defend to our investors why we're investing in that bank and what transformation, because we first need to transform that bank into a smart bank and allow our friends, whether they're from Malaysia and from other regions, from other areas, to access that and open an account in our bank. So it's part of a strategy, a bigger strategy for a network of banks that are ready to transform. I'd also like to share that the bigger banks are harder to transform because they have built their trenches in deep regards to their infrastructure. The tech banks are not too hard, not too easy to transform, but they're in that middle where they can fund it and they have the appetite to pursue. The smaller banks want to, but they don't have the funds.
Yeah.
So you need to have help from either EDT or the government to fund it.
Right. Thank you very much. We don't have much more time anymore left. So to close it out, thank you very much for our panelists for sharing and such insightful perspective on the future banking and financial services. It's clear that while the challenges are complex, the opportunities for innovation, inclusion, and impactful transformation are even greater. Thank you very much. And I hope you got something from our panelists. So if you can give a round of applause for our panelists.